Happy Juneteenth, everyone. This is a day that symbolizes hopes and dreams clashing with reality, but those same hopes and dreams making the reality. And it's still in progress, but we're going to get there. And the same theme held in trading in the financial markets this past week, with SpaceX being at the center of a lot of the action. That stock to me represents so many hopes and dreams clashing with reality. At least in my mind, the reality is space could not possibly be worth the tens of trillions of dollars that SpaceX claims it will be. And that means to me, the valuation is way too high. And yet, the people who believe in these hopes and dreams, I think, have a chance, although it may be, to make all of this a reality. It's kind of fascinating to watch. I'm not bought in, but I'm loving watching what's going on. Then the other place hopes and dreams are clashing with reality is with the Federal Reserve. Now, we saw Kevin Warsh's debut as the new Fed chair. He came out strong. He was resolute. He was confident. He was determined that inflation will die. And how is it going to die? He didn't say, but he sure is doing the classic jawboning, Federal Reserve jawboning that we have seen in the past to try to get inflation under control. So we have the hopes and dreams and jawboning will be enough, but the reality to me is that it won't be enough. But if, Warsh is skilled and he continues to jawbone effectively, I mean, he looked very confident, looked very effective on this past Wednesday. He actually could talk inflation to death. Again, something fascinating to see. And actually, I put a link down below. I wrote a whole blog post on my commentary, my observations on the Fed Reserve meeting this past Wednesday. Then finally, hopes and dreams, the Iran war. We got another deal. This time it's going to be a 60-day cessation of hostilities, aka ceasefire, aka another end to the war in Iran. And the hopes and dreams, of course, is that this time is for real, that the war is indeed on a path to ending, and we could see that, at least things are much better than they were at the beginning of the war. So that's the hopes and dreams, that this war is on its way to ending. And of course, the market has acted like the war ended back when the first ceasefire was declared back in early April. And if the war mattered more to the markets, I would talk more about the war and the tragic impact and all of the other things that go along with this conflict. But because this is a show and it's a blog that focuses on financial markets, I actually don't talk much about the war because it doesn't have much impact or relevance to how the market is behaving. The market has pretty much looked past this war ever since that first ceasefire in early April. But anyway, so the reality is that this war is still going on. It's still hot. In fact, as I'm recording this, I know there's a headline that claimed that, just a day in, there's already delays in getting the negotiations going because of what's going on in Lebanon. Anyway, that's the most I've ever said about the war. But I felt like, particularly given the theme of reality clashing with the hopes and dreams, that it was appropriate to at least spend a little bit of time talking about it. But anyway, that's the theme. Hopes and dreams clashing with reality. I think we're going to see that ongoing for the next few weeks, next few months, as we've got lots of tensions in the market. And in the stock charts, I'll show you more tensions because the trading in SpaceX stock shows tensions and market breadth. As you know, I've been talking endlessly about it, but the tensions are really building there. So hang in there. Let's take a look at the charts of what they're telling us. All right, this is SpaceX, otherwise known as Space Exploration Technologies Corporation, ticker symbol SPCX. Let's take a look at the market tensions that are in place. For a review, there's only 5 days of trading here. First 3 days up, last 2 days down. So this sets up the overall tension. Let's just do a quick review. Stock IPO 135, open at 150, closed around 161, 162, and faded all the way from 177. So that's when I said at that time that the stock looked topped out to me, but if it got over 177, it was going to take off. So the but came into play. The bulls, the people were buying into the hopes and dreams of trillions upon tens of trillions of revenue and market opportunity. rushed right in, and the stock took off for a very impressive 19.6% gain. And the bullishness continued the next day for a 4.8% gain. But this is when the tensions showed up again. And this is the reality. The reality is the stock got way ahead of itself. Now it's at it got up to as high as 220, let's just call it 226. So keep in mind, that means that it at that point had already gained 50% from its open just in 3 days. That to me is just, I already thought that 135, 150 is already overvalued. Going up 50% in 3 days, just that's the reality. That's the tension. That's hopes and dreams now bashing into reality, and you could see what happened. Major fade from that level. The stock lost over 10% from that high and to the close, which is now going to be the closing all-time high for now of around 202. The next day lost 5% and now created a type of bearish engulfing pattern. Sure, it didn't open up above the high, but I think this is close enough to a bearish engulfing pattern to call it a technical top. And then the sellers continued and took the stock down 3.6%. And here comes the other side of the butt, which is that the stock did trade as low as 172, and then the buyer stepped in and took the stock all the way back up to about 180 to 185 to minimize the losses. So now the battle lines are drawn between the bears and the bulls. We're going to call it 150 at the open and 227 at the intraday high. Given all of the attention on this stock, I think there's just going to be a lot of churn in between here. I think there are about 11 leveraged ETFs already trading on SPCX, bullish, and bearish ETFs. Options are now trading. So there's going to be a lot of churn as people try to rush in and out of this stock very quickly for their gains. And actually, let's take a quick look at the intraday trading. So this will make it very clear sort of what's going on here. In terms of the churning. So you can see, actually, let me just quickly show, here's the gap up on the second day, led to a very impressive gain. Here's the stock. This is a 15-minute chart. Here it is going parabolic. And we know what happens at the end of parabolic moves. Whenever it is the end, there's a reversal that sure enough happens sharply in the next 45 minutes after the first 15 minutes. And now it's just been cooling off ever since. Now, this is where the other side of the buck comes in, because this is a very impressive comeback by the bulls or the buyers, and we'll just see what happens, right? Going back and forth. But again, this to me, SpaceX symbolizes the hopes and dreams bumping up against reality. But if the buyers are going to be this excited, this motivated, particularly to pick the stock up off of intraday lows, maybe they can, by force of will, make that reality of big gains and multiple trillions of additional market cap come true. And here is my favorite technical indicator, the percent of stocks trading above their 50-day moving averages, what I like to call AT50 for above the 50. I'll start actually with the reality. The reality is that market breadth, the underlying technicals of the stock market are still bearish. This downtrend line is still in place. It's the purple line that I've drawn here, but the hopes and dreams have finally showed up. And they showed up a little early in mid-May, but now they're more real. Look at this. Market breadth has been holding support firm around the 50% level. This means that there are buyers showing up at particular levels and for particular stocks. And this is very encouraging. And now the tensions are setting up, right? You can see the convergence is coming in the next, I don't know, at this pace, maybe 2 weeks, no more than 2 weeks. We should get a resolution as to whether this downtrend ends and we can finally say that the technicals underlying the market are good, or it'll break down and then set up a return towards oversold levels. That's going to be the most important market tension to watch. And of course, SpaceX, I think, will continue to be symbolic of how money is being pulled and pushed around in the market. The more that SpaceX goes up, I actually think the more market breadth may come down, but that's to be seen, right? All right, let's take a look at the percentage of stocks trading above their 200-day moving averages. It's not bearish or bullish, but it's just not confirming much of anything. This line that I've drawn in here for a while represents the SP 500 at its all-time high, early 2025. It's been holding as kind of a pivot. And basically just means that, the underlying technicals, the longer term, are hanging in there. Not bearish, not bullish. So, we'll take that, right? All right, let's get to the indices. I want to go through things pretty quickly here because I've got a lot to cover. This is the S&P 500. This former double top is now starting to become more and more important as a pivot point. When we got the first news of a deal in the Iran war, it gapped up above that former double top, 1.6% gain. But look, things have been going down. And notice, even more importantly, never during this week did the S&P 500 challenge its all-time high. So I'm a little suspect of the of the setup right now in the market, because if technically, or not technically, but yeah, you know what I mean, things should be even better than they were back in May at this all-time high, and yet the S&P 500 couldn't even challenge its all-time high. And of course, we had the Fed meeting really taking the air out of the market on Wednesday with a 1.2% gain, and then more news of a 60-day ceasefire, aka end of the war, aka tensions being geopolitical tensions being over. The S&P 500 did gap up 1.1%, but it still did not get above that double top. So things are getting a little dicey on the technicals here for the S&P 500. And as always, I'm going to be keeping a close eye on it. NASDAQ, similar kind of thing. I'll just remind us that very nice holding of 50-day moving average support. That's that red line, but now it's churning around its 20-day moving average, which is the dashed line. And just like the S&P 500 didn't get up to its all-time high, it didn't challenge it. In fact, it didn't even come close. It's even further than the S&P 500. Now, on the good side, the hopes and dreams right now are all in small caps. You can see IWM well above its former double top. It did make an all-time high first day of the week, and it's hanging in there, right? 20-day moving average is becoming support again. It's looking pretty good. All right, let's go into the individual indices. Now, you would think that with the Fed getting, well, with Warsh in particular talking a good game on the hawkish side, gold would not do well. Sure enough, it didn't. It dropped 2.3%. And even more importantly, it faded from this line that I've drawn in here. This was the former all-time high from back in October, and it formerly held as a nice breakout point, held out as support here. Actually, let me just make it clear. Held as support here, held as weaker support here. Let's get that circle going. Weaker support, and now it's broken down below that. It's below the 200-day moving average, which is that long-term market breadth. Moving average, and it's bearish. I mean, and it faded from this line. It's broken down below 200-day moving average, which is very bearish in my book. I'm not interested in gold. Silver, ticker symbol SLV, similar kind of thing. It's broken down below its 200-day moving average. It's in bearish territory. I'm not interested in trading it. It did look hopeful earlier in the week. It broke out, but of course the Fed's hawkishness, at least the jawboning hawkishness, took it down 4.4% and back below the 200-day moving average. So gold, silver, I've taken off my radar, off the shopping list for now, but I'm still very bullish on the commodities. I'm holding on to my commodity basket. All right, another tension we have is between consumer-facing stocks and tech stocks. Let's look at consumer-facing. XRT, the State Street Spider S&P retail ETF. This is very interesting. It collapsed, not collapsed, but it faded really hard, 2.9% in the wake of what the Fed was talking about. A little surprising, given that it should have rallied on the hopes that inflation is truly dead, as Warsh has promised, and then instead soared on 2.1% on Friday. What's going on? Well, oil prices, right? So I think oil became the theme of the day for Friday, that encouraged people to jump into retail-facing stocks. But let's just remind ourselves, XRT overall is mostly just chopping around. It's of course off its lows from a few years ago, but it's also still off its highs from 2021. Overall, it's just jumping around in a trading range, but I do like to keep an eye on it for very swing trade type setups. Red Robin, Gourmet Burgers, ticker symbol RRGB. I talked about this. I won't go through all the technical setup, but it's worked out extremely well. Broke out out of this 200-day moving average pivot box that I drew. I mean, I wasn't anticipating this kind of game, but 23% breakout, I'll take it. I'm still holding on to my position. I really love it when, of course, I really love it when the technicals work out like this. So we have casual dining, certain stocks that have been beaten up, and let's remind ourselves, Red Robin has been truly thrashed, right? I mean, it was as high as 70 and more, and it's in single digits. So I don't think it'll ever get back to that point because the story is the restaurant is in contraction phase, but this is still encouraging that this bearish to bullish reversal is playing out as I had hoped. But on the other hand, we have McDonald's, ticker symbol MCD, which is still bearish. It topped out at an all-time high in February, and it's been going down ever since. And this 50-day moving average is held as resistance. And in fact, on Friday, instead of rallying like other casual dining stocks, it fell 1.8%. And that means that right here, 50-day moving average resistance is hanging as is holding on, is preventing the stock from getting higher. All right, CarMax. I talked about this one, ticker symbol KMX. It's playing out. It continued to rally into earnings, came down 9%. Now, this is kind of where trading could get kind of tricky. I assumed that with that downtrend, with the negative reaction to earnings, I had time to start buying the stock. I thought it might get down to 200-day moving average support even and allow me a fresh opportunity to buy at a lower price. But an analyst had the same idea and got in, basically front ran my plans by upgrading the stock all the way from equal weight to overweight, price target 66. The stock pretty much reversed. It did reverse its post-earnings losses and then some, and now it gained 13.1%. I think it hasn't been this high since, it's kind of hard to see with all my labels, but since, last September or so. I went ahead because I don't want to miss out. If the stock continues to rally from here, I got in with a hedge play, some calls, some puts. So I'll do well if it keeps rallying from here. If it pulls back, I'll just have enough profit to pay for the calls. But then the good side of it pulling back will be that I can get the stock that I want to get at a lower price. We'll see how that all plays out. We'll call this the kitty consumer side of things. This is Roblox, ticker symbol RBLX. I've been suffering for a little bit here. The encouraging part is on Friday, gained 7.3%, 50-day moving average breakout. Looks like, again, I'll have to draw a box here to make it clear. Here is the bottoming box, roughly right there. I'll put a little green box to make sure that I'm talking bullishness. You can see that perfect breakout above the box. I think this is a nice confirmation of a bottom. In fact, I might even buy additional shares in the coming week. So I'm happy to see this turn happening. And then finally, home builders, another type of LGI Homes. This is LGIH, ticker symbol LGIH. And it looks like it has been churning higher and higher and higher. It's well off its highs, but I like to keep an eye on this because they're one of the worst performing home builders in my universe. They're heavily indebted, but seeing the stock hang in there, because at the March lows, it got as low as where it was back in the pandemic. It's now coming back. If it can get above 63, this stock might be back to its old ways of just rallying. But we'll have to see. Home builders have been really a tough place for the last 2 years or more, and this will be another part of tension to see how monetary policy plays out in helping or hurting the home builders even further. All right, let's go to tech. As we know, tech, semiconductors are all the rage. The chart says everything. I don't think I need to say more. New all-time high for SMH, and what else can I say? It had some choppiness earlier in June, but it more or less held that 20-day moving average support. Semiconductors is pretty much the most bullish thing in the market, or at least in tech as it is right now. Part of semis is the memory chip players. This is Round Hill Memory ETF, ticker symbol DRAM. Really quick review. I drew out this blow off top. Of course, I wasn't going to short it because this sector is just way too hot to be shorting. It did follow through, but that 20-day moving average, it held strong. This is a great sign of constant buying pressure when the 20-day moving average can hold a support. I bought in on DRAM when it fell back after the breakout, fell back to that blow off top line. It worked out well, but all that choppiness got me a little concerned. I took profits here on this day when it jumped 13.15%. Actually, let me just draw an arrow so you're clear what I'm talking about. And then it proceeded to continue higher. And of course, now I'm looking back and wishing I wasn't so scared. But anyway, that's how it goes in trading. Win some, lose some, or win some, wish you could have won some more in this case. Intel, ticker symbol INTC. I talked a lot about Intel. I said I was going to stay more disciplined and watch for the opportunities. It worked out. I think I've been able to successfully trade in and out twice, but I missed this last one. And remember, I recognize Intel has a very high valuation. It's pretty much, I think, one of the most expensive semiconductor stocks in the sector, but the news flow is just too strong to ignore. It's carrying the stock higher and higher. Friday, there's confirmation that Apple will work with Intel to build chips in America. That took the stock up 10.6%, new all-time high. I can't ignore this. I really was supposed to have bought, again, according to my rules, I should have bought on this pullback 8.5%. I stalled because I wanted to see whether it was going to break through the 20-day moving average support. When it popped the next day, I still stalled. So I kind of regressed to my old ways, but I promise I'm going to get back to the disciplined ways of taking every opportunity that I can in Intel. All right. Now, when we talk about semiconductor stocks, of course, they're benefiting from all the AI build out. One of the beneficiaries has now been PC stocks. And this is Hewlett Packard Enterprise Company. As a quick review, ticker symbol HPE. It had a great post-earnings pop earlier in the month, but then it's been fading ever since, fading from the intraday all-time high, which is around 63. I kept an eye on it, and then I got in, I think, some call options around when it tested when it seemed close enough to the 20-day moving average, and I'm just going to hold on. I would like to buy shares if it comes down. You can see that all the post-earning gains are gone, so this could be bearish, but we'll see what happens with ticker symbol HPE. Since we're talking about the AI build-out, let's look at Vertiv Holdings. I haven't looked at this in a long time because I did take profits on my longer-term position earlier. This is ticker symbol VRT. I got in on a trading position, a little aggressive, a little early. I've seen this story before. Technically, I should have stopped out on this 50-day moving average breakdown, but I just saw with the semiconductor so strong, I decided just to hang in there. And sure enough, time rewarded me. It's back above the 50-day moving average. I may not hold for much longer because, like I said, this is now a trade, but I am encouraged that the upper Bollinger Band is curving up, which means that the stock may have some more room to the upside in the short term. Now, here's a nice one. Cerebrus, since we're talking again about AI, ticker symbol CBRS. I am no longer bearish on it. As a reminder, I was very bearish. You can see this straight downtrend line with the purple line, and I did fade it once. But now the script has flipped. Look at this. I think initiations came on Monday, June 8th. Stock soared 18.3%. And then the sellers faded, took advantage of that profit opportunity. Thank you, analysts who initiated the stock. And it pretty much erased all of those gains. But look at what happened after those gains were erased. The buyers have started stepping back in. Let me just zoom in here a little bit. This is what I'm particularly looking at here when buyers on this Tuesday came in on the intraday low, and Cerebrus has been going up ever since. It even overcame that fade on Wednesday on Fed Day from the 20-day moving average, which is that dash line is just now starting to form. This is classic bearish to bullish reversal. So I am actually now bullish on Cerebrus, and even better is that the stock seemed to have gotten close enough, hopefully close enough to its IPO price of 185. It got down as low as 197. So this is now on my shopping list. As a trader, you can't stay dogmatic about a particular position. You go with the price action, you go with the technicals, and here I'm going with the technicals. Cerebrus looks like it's actually bottoming out. It is no longer a good short. It looks more like a good long. Finally, Caterpillar, which is sort of an industrial AI play. This is one, I've been talking bullish about it. I should have just bought some shares and just sat on it. Now, I did buy an industrial ETF that has Caterpillar in it, so I'm actually happy about that. But it's not giving me nearly the gains that just being in Caterpillar alone would give. Look, it's now gone parabolic. So it's a mild parabolic. I'm not expecting anything dramatic on a pullback, but I am sure looking to buy on a pullback. Note that once it got past 900, it had to get to 1,000, right? Nice round number. So that how it behaves around 1,000 is going to be the key thing I'm looking for. And we'll just see what happens with ticker symbol CAT. All right. If semiconductors are doing well, if AI trade is doing well, probably software is doing poorly. Sure enough, iShares expanded tech software sector ETF, ticker symbol IGV. I think the picture says it all. I've talked about the parabolic move. I was hopeful that support would hold. It did not. Instead, we've got the classic. Actually, we've got one of the worst responses to a parabolic move, which is not only is there a sharp pullback, but also the entire gain from the parabolic move is gone and then some. I mean, IGV sliced right to 200-day moving average support, which is the blue line, fell right to 50-day moving average support. Tantalizingly, it looked like it held in. I bought some shares, and now it's come back down below the 50-day moving average support. I think this is probably some short covering, but also looks like buyers are now exhausted. I'm still convinced that this selling has been overdone sector wide, but the price action is what it is, right? And it looks like this ETF, and you'll see some software stocks I'm going to go into, they look completely exhausted to me. I'm not expecting much to come for the next several weeks or months. I'm even bracing myself for a retest of the recent lows just because of how badly some of these software stocks are doing. And let's take a look. IBM, International Business Machines. I talked a lot about IBM already, but I want to point out that I was very positive about this big move. I was really celebrating it. Quantum seemed to be a durable story for IBM now. And now look, the stock has come straight down along with software. It's barely clinging to 50-day moving average support, and it's in danger of reversing all of the goodness from that quantum move. I'm hoping not. I've lost a lot of gains. And actually, this is a good lesson because I have a longer term vision on where IBM is going. I did hold on, but if I were trading IBM, just the lesson here is that after this big run up above the upper Bollinger Band, I would have taken profits at least by the confirmation that the move was over, which was this big 7.1%. Actually, let me just point it out here. This big 7.2% loss. Okay. That's a trading lesson and a lesson in how painful it can be to try to hold on to a narrative for the long term. Here's one, Accenture, ticker symbol ACN. I was really hoping that they could make a go of it with their AI business, generative AI business, but clearly they have not been delivering the results the market wants. They lost 18% on Thursday, biggest one-day loss for Accenture. They are now down to levels, let's just take a look, that they hasn't seen since 2017. I mean, this just ugly, 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 ugly. 9-year lows. You could see I talked about this before, this on the longer term basis, this big double topping pattern, very bad. And it's basically held, and it's told you everything you need to know about Accenture. It's also a case where I had a longer term bullishness, but I let the price action take me out of the stock. So glad that I did. And basically, this is a stock that's just not buyable until a lot of repair work happens. And I don't see that happening for quite some time. Gartner, ticker symbol IT, they do a lot of research in tech, and they have been caught up in the AI panic over software. They benefited really mostly for just one day from the recovery in software. Nice 10.7% gain on June 1st at that peak, that parabolic peak. I decided to hold on. I'm on the fence as to whether, looking at what I knew at the time, whether I should have just taken profits or not. But I really think Gartner is going to make it happen over the longer term. And that's why I decided to hold on. So now I'm back into the lost territory on this, unfortunately. And Gartner is back down to where it was trading in October of 2020 or so. Not looking good. If it breaks down below the pandemic lows, oh my goodness, I will have to do some serious re-examining of whether my long-term thesis is actually strong enough to hold up against intermediate price weakness. Now, here's what really makes me worried is that stocks like Adobe, ticker symbol ADBE. What else can we say? It had another loss, 7.3% post earnings. Sellers have just been all over Adobe. It's trying to get serious about its AI related offerings, but the market's not trying to hear it. Clearly, the valuation is just going to keep coming down. In fact, I'll write about this in my blog, but I was in a webinar that said that software valuations are below the S&P 5 S&P 500 valuation, I think it was trailing PE, not forward PE, for the first time since the early 2000s. That's how bad people are trying to get out of software. And Adobe now, I've been keeping an eye on it because I keep thinking that Adobe is oversold, but it just cannot keep keep its legs underneath it. And it is back to lows its last prices it last saw in 2018. So I can't even contemplate buying Adobe until it has a lot of repair. So it's sort of like Accenture. Now let's enough about the bad stuff in software. Let's talk about database, MDB. Ticker symbol MDB, MongoDB, big gain after earnings. Actually, it also benefited from that big last gasp of buying. And software soared 20.4%. It too lost all of those gains, but look at this. Very nice. Holding on to 200-day moving average support. It's on my buying list in the coming week. All right. I haven't talked about financials in a week, but financials got my interest last week because State Street Financial Select Sector Spider ETF, ticker symbol XLF, went on a run. Got a little ahead of itself. You know exactly what I'm going to say when a stock or even an index or ETF closes above its upper Bollinger Band several times in a row. Whenever that ends, a sharp pullback's coming. Sure, this was just a 1% pullback, but for XLF, that's a pretty big deal. I mean, you can just see based on the candles. It also stopped at a natural resistance point, which is the former all-time high from September of 2025. So I'm on the fence as to whether financials are looking good or it's been confirmed to be going nowhere. And of course, this is in reaction to the Fed being so hawkish, or at least coincident with it. So now I'm not kind of on the fence. I don't know whether financials are telling me that I should be more bullish on the stock market or not. But I also, as I say, I can't be bearish on the stock market when financials are bullish. And unfortunately, this is kind of on the fence. All right. Speaking of financials, here's SoFi, ticker symbol SOFI. And all I can say is, look, the CEO keeps buying up shares. I may have even missed some of the episodes of buying. He's buying in big chunks. And like here, 1 million, 500,000, 250,000, 250,000. So of course, it looks like he's trying to reduce the amount that he's buying now, but still, I just can't ignore this. I know there have been some insider buys that have failed and they don't always work, but this one is just too much buying by the top person in the company. I have to buy in and just see what happens and hopefully benefit from whatever it is he sees in the company. Good news is that SoFi is holding its lows, so there should be some momentum. You actually could see the trading volume here very slightly starting to pick up, right? And hopefully, there's a lot to be gained by hanging in there if SoFi is about to turn around with some good news, right? It was at 32 or so not too long ago. So this could be almost double at some point. All right, Robinhood markets, ticker symbol HOOD. A lot of talk about perpetual futures, I think, have helped Robinhood and basically stay out of the orbit of the recollapse in crypto. I'll get to that in a second. I took profits too early, no doubt about it. I got a little worried that this was just a short-term bounce right here. This was in late May, and Robinhood went on to basically hold support at the 50-day moving average right here. I really should have bought back in, but I did not, and now I suffer the consequences of missed opportunity. Robinhood has broken out, confirmed a breakout above the 200-day moving average. It's bullish. Yes, there's a 10% workforce cut announced on Wednesday. It's unfortunate. Wall Street, of course, usually loves job cuts, and here they are again. Robinhood jumped 8.8% on that news. I'm not sure where or when I would buy back into it, but I am looking to see if Robinhood can at least hold 200-day moving average support to encourage me to get in there. As I said, crypto has collapsed. Hood has survived it. MicroStrategy, or actually it's called Strategy now, is not surviving this latest pullback in crypto. Bitcoin in particular, ticker symbol MSTR. It's fallen straight down 3 days, and it is now challenging the lows from February when crypto winter looked like it was going to extend for decades to come. Just really quickly to show Strategy's been doing very poorly since it hit all-time high 2024. sold off at least about 80%. And even so, you could see that even though it sold off 80% from those highs, it's what? It's still almost a 10 bagger from the lows of certainly of the pandemic, right? And even from as late as 2022. So unfortunately, there's a lot of air underneath this stock, and it could go down. And it all depends, of course, on how the company's managing its Bitcoin holdings. Finally, defense stocks. I had to look at them given the news, and also because it caught my eye. Because on Thursday, big pullbacks like this shipbuilder, Huntington Ingalls Industries, ticker symbol HII, it fell 3.9% for a new low. Back to hasn't been this low since October of last year. I did talk about Huntington as a way to a way to invest in the country's need to rebuild ships. And it worked out for a while, but then it had a topping action. I'm glad I got out, took out the profits, because now the stock is below where I bought it. And now the technicals look so bad, I'm not interested in buying it anytime soon. I am keeping an eye on it, though. And then Lockheed Martin, ticker symbol LMT. I did go short the stock. It wasn't any kind of thematic play. It was just the technicals. So I consider this sort of fortuitous in a sense for the position, not for the company, of course, or anything like that. But it fell 4% from the resistance I was shorting against. I think it was at least a month ago that I did that. And now the technicals are really bearing down on LMT. See what happens. Of course, it's doing much better than HII is. All right. Thanks a lot, everyone, for checking this out. As I said, the hopes and dreams are clashing with reality in many different ways and many different narratives for the market. So stay on your toes. If you have any comments or questions, put them down below in the comments. As always, like and share the content so the algorithm knows it's up and I can stay encouraged to keep producing this content. Subscribe to the channel so you can get timely notices when I put out more content. Happy Juneteenth, everyone. Thanks for hanging in there. And I will see you the next time. Be safe. Take care. And happy trading and good investing to you with this informational content. Take it easy.